Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Thursday, August 4th. Firstly to cable, British pound, US dollar, and very strong selling in this market today. A very large black body candle as a result of the BOE easing today, and the sellers coming into this market quite strongly, halting the advance that we had seen over the last week or so. That advance had been rather mild, but there was some hope here. This white body candle from two previous days ago was an attempt to build some upside momentum, but the market testing within this range, extending up to about the 135 level, has been an important area where we have seen previous resistance and previous lack of commitment from the buyers. Today, the sellers have shown some strong commitment here today, closing just beyond the 131.21 level. This area extends down to these swing lows, down around 130.55, and we could see some follow through today. If we do see a close down below that region, we certainly could see the market testing back down to 127.99. At the moment, we resume a bear market in all three timeframes, trading below each of the Ichimoku indicators. Now, just looking at this pattern that has developed in recent times, with this market basically pretty much going sideways for periods of time here, we have something of a complex inverse head and shoulders pattern that may be forming, and as always we need the downtrend, and there we have the downtrend selling off after the Brexit vote. A very small left shoulder, a larger head extending down through the trough of that left shoulder, and a higher trough forming a complex and more drawn out right shoulder here. The right shoulder hasn't completed yet. We have drawn the neckline between the two potential shoulders here, and the market is retracing back from there. So as I said, there is potential for the formation of an inverse head and shoulders pattern, but it hasn't been completed yet. With this selling in this market at the moment, if we do take out this area, it may form an even more complex right shoulder, and if we do take out the head, the low at the head down around 127.99, then it certainly would negate this type of inverse head and shoulders pattern. Now, just looking at the bands here with cable, and here we see the bands continuing to squeeze, suggesting that we should be prepared for some trending price action. The direction of it is debatable at the moment. We did have a bullish breakout to the upside, but we didn't see the required follow through nor the market taking out these swing highs, and that was required for us to be convinced that we would have a new significant second time frame uptrend forming. Importantly, the market is now trading back within the bands. That previous upper band had been holding as support for the prior day's trading. If you recall, we were looking at a potential tweezers top pattern, and that has been confirmed here today with the market making lower high and lower low. The bottom of the bands at 131 has been holding a support and continues to do so. So some very important trading coming up over the next probably about a week or so. We could see a breakout in either direction. If it is to the downside, we want to see a strong bearish breakout with strong bearish follow through. Next to the euro US dollar, and following price action being rejected from the Ichimoku cloud, we see a formation of another black body candle suggesting net momentum to the downside. The sellers have closed with control. It's a moderate form of control by closing between the midpoint level and the low, but the size of the body has reduced drastically, and this does suggest that the net momentum that we saw in the market previously is no longer there. We have, however, seen the trend continue to the downside, and this was something of an extreme day for the previous day, and we don't tend to see strong follow through following extreme days. There is still an opportunity for the market to trade lower, but we are likely to find strong support at 110.97 with the Kijun-sen and the Tenkan-sen trading around that region. Next to dollar yen, US dollar, Japanese yen, and here we have seen confirmation of a change of trend to the upside. If you recall, we were looking at a potential tweezers bottom pattern. The two lows here on these candles around the same level, also a potential bullish harami pattern, and confirmation of that today, but the confirmation has occurred on a doji candle, the most indecisive type of candle that we can have, and this suggests that the buyers have lost commitment above this 101.40 level. The sellers have lost commitment down below the 100.85 level. So a lot of indecision in this market, and certainly a lack of strength from the buyers. We do need to be cautious and just judge how the market tests around this resistance above and support below. If we see a bearish breakout to the downside down through 100.58, we could end up testing down to around the round number 100. We are likely to find very strong support around there. If we do have a breakout in a bullish manner above 101.40, we could end up testing up to the 102.75 level. In terms of Ichimoku, still a bear market in all three timeframes, not looking too overextended, and the Chica span is supporting this bearish activity at the moment.